Another tech company that was in the headlines today was Dell. The battle over who will control the company is heating up. The struggling PC maker has received two alternative takeover proposals, one from billionaire investor Carl Icahn and the other from Blackstone Group. Now, the bids could be superior to the $24.4 billion offer from founder Michael Dell and private equity fund Silver Lake Partners that was made last month. Michael Dell is reportedly weighing the Blackstone offer because it could be potentially more friendly toward management. Shares of Dell are up over 2.5% on the news. They were on the day. Merger and acquisition activity has been another reason for the stellar performance of stocks so far this year. And for more on the Dell bidding war, we are joined tonight by Joe Deaux. He's a staff reporter at online financial site The Street. Joe, thank you for joining us.
Thanks for having me.
Look, I think we should start with the bids. Take a look first at Michael Dell, the founder of the company. He's offering $13.65 a share, valuing the company at roughly $24 billion. Now, Carl Icahn and Blackstone are offering more per share, but their structure's a little differently. They might allow part of the company to continue to be publicly traded. Why would they structure it that way?
Well, there's a lot of reasons. First of all, they might want to keep some shares on the table for some other large shareholders that are in the company right now, and so that's one reason they might be there. The structure's a little different, right? So Carl Icahn has offered cash to shareholders up to a point, and then basically says you'll hold some shares, whereas Blackstone has said, we'll definitely give you some of the shares, but we really give you the main option of cashing out completely. And so there's two big differences, but you know, color to look at.
All right, and which would you say is the most interesting though for shareholders?
Well, the most interesting might be with Carl Icahn, simply because it's Carl Icahn. You don't really know. I mean, Carl Icahn's thrown out kind of an ambiguous plan here. I mean, you know, he's had some other deals, CRV Energy, in which he did something very similar. And so people are wondering, okay, well, last time he did this, similar to CRV Energy, people took the shares, and he actually ended up turning the stock around pretty well, making a pretty good amount of money if they stayed in. So what if we give him the option and we stay in on the shares?
Right, but we see Michael Dell doesn't seem to favor Carl Icahn. He's more backing Blackstone. Why is that?
Well, you know, of course, Michael Dell initially came up with his proposal with Silver Lake. It seemed like Michael Dell wanted to stay in leadership. He wanted to stay the CEO of this company. Carl Icahn may not want to, we're not sure, but at least with Blackstone, it seems like, according to reports that came out in the past few hours, that Blackstone might be more willing to keep Michael Dell in the company, and it seems like that's what he wants.
Right. Now, is that a good idea, though, given he is the founder of the company, and basically what they're trying to do is turn this company around, because 50% of their revenue is from PCs. We've seen that market really eroding over the past couple of years now. So they have to make a turnaround. Do we need to see Michael Dell the head of that to do that?
Well, it depends on who you are, right? So Carl Icahn and people behind him might say, well, not necessarily. On the other end, there is still enough reason to believe that he might be the guy to continue to run this company, right? I mean, he's been around forever. He jumped back into the company in 2007. It seems like he has some ideas, right? They want to go after their server business, government contracts. A lot of people think, well, what if those take off, right? And what if Michael Dell's the guy behind it, you know, to really push it along?
Now, another part of the strategy, though, is to make greater inroads into the emerging markets, where the margins are slimmer, though. Is that a wise idea for Dell?
Well, at this point, a lot of people would say Dell needs to look for growth somewhere, right? I mean, if you continue to leave the company public, a lot of people are saying the shares will just erode, the value of the company is going to go down. And so if they're looking to emerging markets, maybe it isn't such a bad idea. I mean, if you're a public company, you need growth. And even if you're not a public company, you're a company in general, you're probably going to want to find that growth somewhere, because it's only so long that you're going to be selling Dell laptops in Best Buy and you know, hoping that people continue to go to the department stores or the retail stores to buy your laptops.
Okay, Joe, last question. We really got to keep it short, though. 5 years from now, do you see Dell around?
I think Dell will still be around in 5 years. How will they be around? Will they be around as a laptop company? I'm not so sure.
We'll have to see. Okay, continuing story. Thank you so much, John. That was Joe Deaux at The Street, who joined us today.